let's move on and lift the veil on non-transparent ETFs. And if you're like me, you'd say, what in the world are those? American Century is widely expected to make history in the coming days as the first asset manager to launch one of these non-transparent ETFs. This follows a wave of approvals late last year for firms like T. Rowe Price, Fidelity, and Blue Tractor Group for their own strategies. Interest has clearly risen in this space, but how successful will it be? So, Todd, you're optimistic. Let's start off by explaining to people what this is. Is this sort of like a hybrid mutual fund ETF?
Yeah, so these are firms that tend to offer actively managed mutual fund strategies that are now getting the right to be able to launch ETF versions of those strategies. And I say versions, they're not going to necessarily be clones and a different share class, but there's firms, you mentioned T. Rowe Price or American Century, that have proven strategies, but instead of having to report their holdings on a daily basis, the way that every other ETF tends to do, they'll be able to disclose the holdings on a periodic basis, mask what's going on inside, let the active manager be able to buy and sell as they see more appropriately fit. And the question is whether or not there is demand. We at CFRA think there is demand for these products. There are folks that are looking and are fans of active management today, but don't have a lot of choices. So the demand for ETFs and the amount of money in these active equity ETFs is relatively small because the supply is relatively small too.
But if I'm a long-term investor, why would I want to do an ETF versus just the mutual fund? Why do I care if it only reports net asset value once a day if I'm not really trading?
So simply the tax efficiency is going to be significantly an advantage for ETF investors. So if you buy and hold in a mutual fund and hold it for the next 5 years, on an annual basis, you're still paying taxes on that for all the trading activity that's taking place in the mutual fund. Whereas an ETF, the trading that happens, the taxes are only when you make that trade yourself. So there's an advantage that's there.
But Dave, I can see how there's an advantage on the tax front. I can see how there's an advantage for the active managers because they pay fewer fees. But I'd be a little leery that it's so easy to get in and out of that I might be exposed to other folks using these and really reducing the sort of the returns.
Well, luckily the ETF structure keeps that from happening because when you buy shares of an ETF, you're buying them from somebody else. And you're not necessarily just buying them at the end of the day at sort of a net asset value. What that actually means is, unlike a mutual fund, your personal experience is uniquely yours. In a mutual fund, if a bunch of people head for the exits and it's been up a bunch, you could get hit with their tax bill.
But you could also get
their trading.
But you could also get a trader moving in and out of this.
Right, but a trader moving in and out won't affect you as a long-term holder at all because you're going to be trading those shares of the ETF on the open market. That's part of why I think these will have some initial traction for institutions that may be a big believer in a particular active strategy. This could be a really interesting way to be a little more aggressive in putting money in and out of those active strategies without having to wait for either a separately managed account window to open or for an end-of-day NAV.
And I would just add to it the active management component that doesn't exist for the triple Qs you mentioned earlier. The sell-off, there's likely active managers that are seeing this as a buying opportunity. If they believe that this is a short-term blip, they'd be able to act on your behalf to be able to pick up things that are selling off, whereas the index-based approach does not do that. And transparency or not, you're still able to use your skill to be able to buy things that are selling off on the cheap as the active manager.
Very interesting. It's always good to have a new product.